This show is brought to you by the Genesis Communications Network, a world leader in talk radio since 1998. Visit GCNLive.com today.
The stocks discussed on Wall Street Raw are not in any way a recommendation or solicitation to buy, sell, or hold. If considering on acting on information, we first recommend you seek out a competent, licensed professional for advice.
What kingdom has sent you?
The kingdom of the Most High.
Nothing you have ever experienced can prepare you for the unbridled carnage you're about to witness. Super Bowl, the World Series, they don't know what pressure is. In this building, it's either kill or be killed. You make no friends in the pits and you take no prisoners. 1 minute, you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The Genesis Communication Network is proud to bring you Wall Street Raw with nationally recognized market timer and previous Wall Street Week elf, Mark Leibovit, welcoming you on board his financial time machine. And here is the elf himself, Mark Leibovit.
Good morning, everyone. Good morning. It's Saturday, July 16th. I'm your host, Mark Leibovit, and welcome to Wall Street Raw. You have a lot of choices on a Saturday morning, and certainly listening to discussion regarding the equity markets and the economy and world events related to the markets is not probably your number one choice, but we certainly appreciate you tuning in and listening to our ranting and ravings about the market. We have a lot of very interesting guests on our show this morning, as we usually try to do. I have my good friend SINCLAIR NOE joining us here in a few moments, and we're welcoming back my good friend Henry Weingarten and Eric HADIK, both to the microphone, talking about their market cycles and how they see things unfolding here, and a little bit of market history along the way. If you want more information about Mark Leibovit and what I do, you go to VR Trader, that's Victor Robert, VRTrader.com, or WallStreetRaw.com, and learn about my technical work. I've only been doing this, about 35 years. I created the technical indicator, the volume reversal. I'm a bit of a contrarian and cynic, as you probably know about the markets. I've seen just about everything, I thought, until this past year, where we see the central banks really running amok in terms of manipulating and rigging the markets. But we'll talk more about that later if we have time, but that's been pretty much the case. I was a floor trader on the Chicago Board Options Exchange years ago, director of research of a couple of brokerage firms. You may remember me as an elf on the old Louis Rukeyser Wall Street Week television program, and as a guest with Paul Kangas on the nightly business report. If you miss any programs, haven't heard recent programs, you can retrieve them from GCNLive.com or from iTunes, so they are archived if you like to check in some of our previous broadcasts. And we've been on the air here since mid-2015, so hopefully we'll continue to do so and bring you some entertainment and information related to the markets. So, you really can't turn your back for a second. As you know, the world is seeing violence, murder, protests in the streets across the U.S., another terror attack in France the last couple of days with that truck. I guess we have to ban trucks now. Powers that be want to ban guns. Maybe we should ban trucks as well. That's sort of a flippant way of looking at it. But, when these terrorists want to do what they're going to do, they're going to find ways of doing it, no matter what barriers you think you're putting up in their path. Where we have political turmoil in the UK. We got Boris Johnson as the foreign secretary over there, and fevered speculation that Japan will resort to helicopter money. I don't know if you read, but our old good friend, Mr. Helicopter himself, Ben Bernanke, was in Japan. We're going to talk about that with SINCLAIR in a few moments. I want to bring that subject up. As you know, this is the king of money printing, and it's been passed down to Janet Yellen, and we've taught Draghi in Europe how to do this, and here we are across the world driving interest rates into negative territory, printing like crazy, buying bonds, corporate bonds in Europe is going on there. We know China is buying bonds and stocks. We know the U.S. has been doing it since the plunge protection team was created back in 1988 under Ronald Reagan, but it's become even more aggressive in the recent 3-4 years under the tutelage of Yellen and Bernanke. So, what do you do here? You got, rig markets. I guess if you're an investor and you hold the S&P, you're tickled pink. It seems like every time there's a big market crash, mini crash or otherwise, we just saw one, as you know, on the Brexit exit just, a week or so back, market bounces right back. It's as if nothing has happened. But, you still have concern because many stocks are still not doing well. We did see the Dow and Industrials move to new highs this past week. Again, if you're an investor in those two indexes, I guess you're happy. And I guess that's what this is all about. Manipulate the markets, keep the indexes up, avoid quote-unquote blood in the streets. Obviously, if the markets were crashing and moving lower and lower and lower, that would create more civil unrest, and investors may not be the only ones in the market. We have retirement plans out there. A lot of people depend on the markets for their retirement worldwide, so keeping those equity markets up is important, particularly here in the U.S. So that's pretty much what's happening out there with regard to, buoying the markets and making sure everybody's happy. But if you look at what's really going on this past week, we did not see the Dow transports into new highs. In fact, they're way away from their highs. Their highs were back in November 2014. We did not see the NASDAQ into new highs. We did not see the Russell into new highs. It's easy to manipulate the Dow Industrials. There's only 30 stocks there, so that's always been the case. Plus the powers that be keep switching components of the Dow 30 around over the years, and that helps bring it higher as well. The S&P, well, there's future markets out there, and that's how the government's in there. You're buying the futures for the S&P and the Dow, trying to keep things moving as best they can. So we know what's going on, but the reality is, you got to trade and or invest and make a decision, and it appears that over the longer term, and I'm not trying to present a more bullish case than I would like to, but over the longer term, the powers that be want to keep the equity prices higher and higher. And though I expect we're going to get a bear market at some point, over the years, who knows? We may see the Dow at 30, 40,000 here in the next 5-6 years, just because that's what it takes, and this is what the powers that be want to see happen, unrelated to reality. Unrelated to corporate earnings, unrelated to the fact companies have been buying back shares and driving their stocks artificially higher. There are some individual successful companies out there, no question about it, but I'm making a broad statement here. So driving the markets higher is probably their goal. So it appears any time and correctly, if there's a big washout, you should be in the markets if you believe that's where you want to put your money. I don't only believe in the markets. I believe you need to be in physical assets, away from the equity markets, away from the banks, away from, the brokerage firms to a certain degree. You just don't know overnight what could happen. Do you have access to your money? So keeping cash, physical real estate, gold, silver, collectibles, keeping some money out of the country, not only here and other assets. Try to be diversified. So that portion of your money that's in the market, that's fine. But to have everything in a 401k plan or everything in the banks or everything in the brokerage firms, I think is foolish because of risks that could happen. The system could break down. There could be terrorist attacks, whatever. You want to be as diversified as possible. So we don't always believe that all your money should be in the markets, but we do trade them. I do them at vrtrader.com. And currently at vrtrader.com, we went to cash last week. We're totally in cash except for one short position we put on Friday, and that was during the day before the Turkish announcement came up. As you know, the Turkish troops launched a coup on Friday. So if we have time later, we'll talk more about that. We may see more of that coming near term. Stay tuned. We'll be back after the break.
You're listening to Wall Street Raw with Mark Leibovit. Go to WallStreetRawRadio.com for information on Mark's newsletters and products. Stay tuned. Mark will be right back.
Are you worried about how dangerous the world has become? In these days of terrorist attacks, natural disasters, or even a future collapse, you need to be medically prepared to keep your family safe. I'm Joe Alton, MD of store.doomandbloom.net, where you'll find an entire line of uniquely designed medical kits and supplies for when help is not on the way. For everything from individual first aid kits to the ultimate family medical bag, go to store.doomandbloom.net today. That's store.doomandbloom.net. You'll be glad you did.
Paid non-attorney spokesperson. Injury Help Desk is responsible for this advertisement. Principal office, Las Vegas, Nevada. This ad is not legal advice, and the choice of a lawyer should not be based solely upon advertisement. Services may not be available in all states.
Attention prescription antibiotic drug users. Have you or a loved one suffered an aortic dissection, aortic aneurysm, or abdominal aortic aneurysm after taking the prescription antibiotic drugs Levaquin or Avelox? These popular antibiotic drugs have been prescribed more than 80 million times since 2004, and medical studies show an increased risk of the following injuries: aortic dissection, aortic aneurysm, and abdominal aortic aneurysm. If you or a loved one used the prescription antibiotic drugs Levaquin or Avelox and suffered from aortic dissection, aortic aneurysm, or abdominal aortic aneurysm, you may be entitled to substantial financial compensation. Act now. Time is limited to file a claim. You may be entitled to substantial financial compensation. For a free consultation and free information, call Injury Help Desk at 800-823-3851, 800-823-3851, 800-823-3851.
There is an affordable alternative to the high cost of healthcare that offers freedom from insurance while providing compliance with the Obamacare individual mandate. Imagine having access to quality, affordable healthcare that allows you the freedom to choose your doctor and hospital. Members can share up to 100% of necessary medical expenses, including some alternative treatments. Find out how you and your family can contain healthcare costs without giving up your freedom. Go to libertyoncall.org. That's libertyoncall.org.
Are your Google search results killing you? Unflattering content in blogs, news articles, online reviews, social media, or other sources can jeopardize your reputation, your business, and your livelihood. Let Reputation.com help. Our patented technology will make the truth about you more visible while pushing down unwanted negative content. Improve your Google search results. Call Reputation.com at 1-800-831-0771 for a free consultation. That's 800-831-0771. To a professional trader in precious metals, the key is spot price. Spot price is market price, what gold or silver actually costs on the exchange. Regular people looking to invest never get spot price because resellers add fees for everything: refining, minting, brokerage costs, commissions. The public is never offered spot price until now. In a limited new customer outreach, JM Bullion offers you the chance to own a 10-ounce bar of pure silver at spot price. No fees, commissions, markups, not even a shipping cost. Now, through JM Bullion, own the most real investment of all at real cost. Not a piece of paper from Wall Street or a bank. A 10-ounce bar of silver at spot price. That's a solid investment. But you must act now. Go online to realpricesilver.com for this limited time offer. That's realpricesilver.com. realpricesilver.com. Limit one offer per household, 50 United States only.
We use mobile devices right against our bodies every day, but growing scientific evidence has emerged showing serious health risks associated with exposure to EMF radiation emitted from these devices. The solution is Defender Shield, the most effective mobile radiation shielding ever developed. Defender Shield blocks virtually 100% of EMF radiation from cell phones, tablets, and laptops, and starts at just $64.99. Buy now at DefenderShield.com. For 10% off, use promo code GCN. DefenderShield.com, the worldwide leader in mobile radiation shielding.
Think positive. Never show any sign of weakness. Always go for the throat. Buy low, sell high. Fear, that's the other guy's problem.
Welcome back to the Wall Street Raw Radio Show with Mark Leibovit, your time machine for the financial markets. Want to know more? Go to WallStreetRawRadio.com. Now, here's the elf himself, Mark Leibovit.
Welcome back, my good friend SINCLAIR NOE from KFNN 1510 Phoenix, and also the author of the great blog, EatTheBankers.com. SINCLAIR, thanks for joining us on this Saturday morning.
Mark, always a pleasure. Thank you.
Well, the banks are busy again, and we have a lot to talk about here. We saw the Bank of England surprised everybody, I believe it was on Thursday, where they did not change or lower their interest rates. I think the speculation was they were going to drop down to 0.25, and they didn't do it.
Yeah, traders over in the UK had been forecasting about an 80% probability. It did not happen, although I think it will probably happen in August. I think we're just kind of waiting, allowing the new government to come in. Of course, the UK has a new prime minister, Theresa May. They're going to get settled in, and I think they're going to then put together a package of stimulus efforts, and we'll probably see it happen in August. Also, maybe they're just kind of keeping their powder dry for right now, waiting to see how things unfold and what the reaction is going to be. But it's pretty much baked in the cake that there will be stimulus and most likely a rate hike in the not-so-distant future over for the Bank of England.
Hopping across the ocean, we read that Prime Minister Shinzo Abe ordered a new round of fiscal stimulus, but I just heard from you. I didn't know this in any great detail, that our good old friend Ben Bernanke was out there meeting with him and probably counseling him, huh?
Well, Bernanke was meeting with Shinzo Abe on Tuesday, which is when the announcement came of new stimulus. So I can just imagine Bernanke was there saying, this is a helicopter. This is how you get it in the air. This is how you make the helicopter rain yen.
I love it.
But basically, this is a continuation of Abenomics. Shinzo Abe got an election about a week or so ago that basically confirmed, yeah, go ahead, keep doing what you're doing at the Bank of Japan. And Bernanke was basically saying you still have a wide range of monetary easing measures available to you above and beyond what you have already done with Abenomics. Yeah, we've got the Bank of Japan, we've got the European Central Bank, we've got the Bank of England, we've got basically everywhere around the world central bankers stimulating economies, trying to push down their currencies, and trying to get the markets feeling good and happy, and apparently it's working.
Even the ECB is talking about lowering their rates as well down to that 0.25 level. Am I correct?
Yes, I believe so. In part because they've seen their growth forecast being lowered. They cut their UK and Eurozone growth forecast following the Brexit vote, and they think that the cumulative negative impact for British GDP is going to be about 1% to 2.5%. For the Euro area, it's going to be less of a problem, but it's still going to knock off 0.2% to 0.5% from cumulative GDP by next year. And this is where you've already got stagnating economies. So they're going to be looking to reduce their rates even further from here, I'm sure. Of course, we're already seeing negative interest rates over in Germany, over in Denmark. Switzerland is looking at negative interest rates. I don't know how much lower they can really push interest rates. I think they may be looking at other stimulative policies. And, of course, they may need to do a little bit more to keep the banks in Italy propped up and a few things like that. But they're apparently going to do it. I mean, central bank policy, essentially they're throwing money at the markets. And they feel like it works. Now, there are going to be some unintended consequences of all this. But for right now, this is the answer that the central banks have come up with. And that's their story. They're sticking to it.
Right, and it's not only limited to interest rates. As you know, the European Commission is out there buying corporate bonds. We talked about that, and we know China is buying stocks, and we have the plunge protection team here, and they do it here, but they don't talk about it. But speaking about the Fed, they came out with the Beige Book report midweek, and we have the FOMC meeting coming up the end of the month. So, still a little bit of jabber going on there. What's going to happen, right?
Yeah, they're trying to figure it all out. They would like to raise interest rates, I think. In fact, we had on Friday, I think we had a few Fed officials coming out and saying, yeah, the economy's looking a little bit better, but I don't think they're going to raise it at the meeting in, 10, 11 days from now at the end of the month. Yeah, James Bullard, Robert Kaplan, Dennis Lockhart all saying, yeah, we don't have to hurry to raise interest rates. There are a few hawks still on the Fed, but I think the doves are going to win out for now. But we are seeing a few signs that the U.S. economy is hanging in there pretty good. I mean, the U.S. economy is still the cleanest shirt in the dirty clothes hamper. And particularly when you have, one of the things that people haven't really noticed lately, China went through a yuan devaluation just recently. It didn't get much attention, but that's a major impact on the global economy as well. So right now, where are you going to go other than the U.S.? You're going to go to China? You're going to go to Japan? You're going to go to the ECB? You're going to go to the U.K.? No. So, as the world did not end following the Brexit, everything just kind of flows over to the U.S. That's what it seems to be, and we hit record highs.
The best-looking horse in the glue factory, huh?
That's it.
Sinclair, thanks for joining us. Sinclair Noe, financial commentator, KFN 1510 Phoenix, and author of the blog, EatTheBankers.com. And we'll speak to you next week, Sinclair. Thanks so much.
Always a pleasure. Thank you, Mark.
Don't touch your dial. We have a couple other great interviews coming up this morning. My good friend Henry Weingarten and Eric HADIK will be joining us here later in the hour. Meanwhile, we saw the University of Michigan said its consumer sentiment fell to 89.5 in July, which is a 3-month low from 93.50 in June. So prior to the Brexit vote, virtually no consumer thought the issue would have the slightest impact on the U.S. economy. So following the Brexit vote, it was mentioned by record numbers of consumers, especially in high-income consumer groups. So meanwhile, we see companies have begun announcing earnings for the second quarter. And the results are not expected to be pretty over the next few weeks. Analytics firm FactSet estimates profits of companies. The S&P 500 index will fall 5.6% compared to a year ago. But we've been climbing this wall of worry, and we have again. I keep pounding the table with the rigging of the markets and the banks in there. So these negative news may have no impact. Stay tuned. We'll be back to you after the break.
Go to WallStreetRawRadio.com for more information on Mark's newsletters and products. Stay tuned. Mark will be right back.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at WallStreetRaw.com. At WallStreetRaw.com, Mark provides you with his latest ideas on how to help build and protect your wealth, help you avoid the next big market crash, and also stay healthy to enjoy your wealth. Mark has a special free gift for listeners of the Wall Street Raw radio show. Go to WallStreetRaw.com and sign up for his free weekly Vice News Raw report. While there, go ahead and sign up for his free Gold News Raw report. You will receive both weekly, and both are totally free. No credit card information is required. Sign up today for your free Vice News Raw and Gold News Raw reports at WallStreetRaw.com. That's WallStreetRaw.com.
Dangerous blood clot device alert. If you or a loved one had an IVC filter placed to prevent blood clots from traveling to your heart or lungs and suffered an injury, you may be entitled to substantial financial compensation. The FDA warns that IVC filters may cause serious complications, such as heart or lung damage, internal bleeding, and even death. These dangerous blood clot devices can break, and the metal fragments can travel to your heart or lungs, causing serious injuries. If you or a loved one suffered organ damage or other injuries from an IVC filter, you may be entitled to substantial financial compensation. Act now. Time is limited to file a claim. For a free consultation and free information, call Injury Help Desk at 800-478-1507. 800-478-1507. 800-478-1507.
This is an advertisement. Paid non-attorney spokesperson. InjuryHelpDesk.com is responsible for this advertisement. Principal office, Las Vegas, Nevada.
In the 1950s, Dr. Joanna Budwig had a 90% success rate curing people of cancer using fresh-pressed flax oil and cottage cheese. The combination of dairy protein with unoxidized flax oil was able to restore oxygen transfer. It is now well known the cells of our bodies require unoxidized omega-3 and 6 seed oils to both attract and absorb oxygen. For the first time, there are seed oils with virtually zero oxidation, even after 1 year at room temperature. All other, quote, cold-pressed seed oils are structurally damaged and significantly oxidized by the time you consume them. Andrea seed oils retain the correct shape, electron content, and information that is quickly communicated to all the cells of your body. By taking these sacred seed oils, your whole body will begin to use oxygen as the Creator designed it. Now combine this with our Life Force Enhanced One World Whey Protein, and you have a winning combination to confer energy and health like never before. Call 888-988-3325 or visit sacredseedoils.com. That's sacredseedoils.com.
As a doctor, I see patients every day who are losing their vision and independence to age-related macular degeneration, also known as AMD. It's the leading cause of blindness in adults 55 and older. Some of us are at greater risk for AMD. If you have blurry vision or blind spots, they can be symptoms of AMD. If left untreated, it can lead to blindness. The good news, with early detection, AMD can be managed with effective clinically approved treatments that can reduce or even reverse some vision loss. Learning that you have AMD can be scary, but there's hope and help. The Foundation Fighting Blindness is researching and developing treatments and cures for AMD. To get your free AMD information packet, contact the Foundation Fighting Blindness today at 1-800-BLINDNESS. That's 1-800-BLINDNESS. Join the fight against AMD, because together there is a cure in sight.
Anything that is thy neighbor.
Welcome back to Wall Street Raw. Want to know more about Wall Street Raw and the Leibovit VR newsletters? Go to WallStreetRawRadio.com.
Welcome back, my good friend Henry Weingarten from the Astrologers Fund. And Henry, as you probably remember from our previous interviews, has been around a long time. He's been doing this for at least 40 years. That's 40 years. He's a managing director of that Astrologers Fund, and he's a consultant to institutional investors and money managers worldwide, and known Henry for a number of years, and has made some great calls on the market, particularly this year, bullseye on a whole bunch of markets. Thanks for joining us on the Saturday mornings, Henry.
Hi, thank you.
So what's going on with the oil market? The oil market ran up from $26 all the way to 51, I believe, 52, and now it's pulling back.
Yeah, we went short around 51, and right now we're at 45, and we think it's 40 before 50. But basically, when it gets to about 41, we'll cover our shorts. Next year, we're bullish on oil. We'll put it in with a 57-plus target. But as you know, after the next month, there's less demand in driving and gasoline. But the main thing is we have an election. If you look back, strangely enough, almost every year going into the fall in the election, oil drops, since apparently people don't like paying high gas prices, and politicians make note of that, and then you notice right afterwards they start to move up. So basically this fall we're going to be looking at buying oil stocks which have been creamed. They're very much like gold stocks, which most gold investors have made close to 100% plus this year just by holding anything. And you'll find similar type situations next year. In oil, you'll make about 50%. So you got to make sure the company has money, so it's not going to go bankrupt. You have to look at its debt. But basically, we're bearish now. Once we hit closer to 40, we'll cover our shorts and then wait our time for September, October, and then be buyers. Lots of opportunities, almost like a dartboard. Anything that's breathing will probably go up 50% plus.
So the big low at $26, that's history. That's it as far as you're concerned.
Absolutely. We were buying down there. Absolutely. There's no reason. There's a problem around once we hit 50 because then the U.S. Oil rigs start coming back on. But astrologically, it doesn't matter because it's bullish next year. So astrology trumps the fundamentals, in my opinion.
Well, speaking of Trump, well, that was a lead-in for me. We have the convention coming up this weekend and the election in November. And I know you're bullish on Trump. His astro chart is positive.
Right.
So
it's stellar. It's a double Jupiter for those who do astrology. So it's going to be very positive. We think he's acting more president-like, which is nice. He's paying attention to Paul Manafort, which I think is the right move, both in his vice presidential pick and in other things. And unfortunately, given the world situation, which is not good economically, well, actually we're getting out of a recession, but still not good. And certainly the violence around the world has to be dealt with, and we really have to declare a war immediately on ISIS and destroy it ASAP. Although you won't destroy all Islamic fundamentalism, you can certainly destroy the head, and it's got to be taken out. And Trump will do that from day one. So we're bullish on his horoscope, and we're bullish on the economy, and we think stocks are going to do well. In fact, some people say the rally is a anticipation of Trump victory, which we think is going to come, but I think it's just overdone game playing. And we've been going short this week a little early from the 18,000 level to the 18,500 level. If markets stay up next week, we'll cover some of our shorts because we don't want to be heroes here and put ourselves in front of a freight train, but we think the markets are way ahead of themselves. Earnings are not that good, and we think we'll see markets coming down.
Yeah, it seemed like it might be a bull trap. You know, you take out the highs, you get everybody bullish. You take out the lows, you get everybody bearish.
Yeah, absolutely. And it's trading. Remember, this is 10 volume, more or less. The big boys are all on vacation, and August are on vacation, so it's just game playing. But the fundamentals is basically that for 5 straight quarters, earnings are going down. So while you have central banks playing games, while you have issues of the safety of the U.S., so there's some positives to the U.S., there are more negatives. In fact, next time we're making up a list of all the positives and the negatives in the markets, and quite frankly, the negatives are slightly greater, and the risk-reward is greater. So it's not terrible. We're not saying the end of the world. We're not saying, we're going to go much below 17,000, although we'd be very happy to see 16.5, which we may or may not see. But there's some time in September, and there's some time at the end of the month where the markets can go down again. So you have to be very selective in what you're buying.
Yes, there are some cycles that point to maybe strength into mid-July historically, and then a sell-off into the fall.
Yes, that's correct. And it's a mixed bag astrologically. There's some good stuff and bad stuff. But there are some whammos in September, plus, of course, your annual October scare, which happens sometime between August and November. So you've got that, and all sorts of geopolitical things. And I don't mean, unfortunately, what happened yesterday in France, because you see the market shrugs it off and doesn't think it's particularly important, but other things that we will consider important.
Yeah, when it happens here on a larger scale, they'll pay attention to it. But I think the markets over the years tend to rally during tragedies, whether they're natural disasters or these type of events anyway, for some reason. So it's perverse. The markets are in their own world, no question about it. Henry, we only have about a minute left here. I know we talked about gold last week. It appears we hit a little bit of a...
1325. We think the 1325 area is going to be a buy area. There's still some more negatives next week. If by the end of next week where we've held 1325, then we take the next attempt up to 1400. If we don't, we could go down 1290 to 1310, and then we're definite buyers. Okay, so we are overbought here, and we are in a little bit of a pullback, though, so it does make sense. Right, just for another week, but by the end of next Friday, if we're above 1325, it's a buy. If we're 1290 to 1310, it's a buy. Henry, I really appreciate you taking time again on this Saturday morning. So if our listeners want to get in touch with you, what do they do? Yeah, they can take a look at my website, or we're on Twitter too. We're TA Fund. TA Fund. So that's a good way to get some information. Or go to our website, afund.com. Either way works. Okay, Henry. Well, thank you so much for being with us, talking to my good friend Henry Weingarten from the Astrologers Fund, and we'll have him back real soon. Have a great weekend, Henry. Thank you. Sure. Bye-bye. Yeah, don't touch your dial. We do have my good friend Eric HADIK joining us here on segment 4 coming up in a few minutes. As we mentioned earlier, the news over the weekend, of course, was the Turkish troops launching that coup on Friday. And this is a revolt against the Islamic terrorists, the ISIS, and this is probably what this is all about. Very much to what we saw happen in Egypt. It's the Muslim Brotherhood, which is being rejected, and hopefully we see more of this around the world. And I think the elections that we saw in Britain and the elections we're going to see here in the U.S., I think it just everybody's looking for a big change, and I think you're going to see more of that coming. And this is, people are disgusted. They don't like what's happening, particularly with the Islamic terrorist situation. So here we are, and those who were friends of those guys are being kicked out. So I think this is part and parcel what happened in Turkey, and part and parcel what's going to happen here in the U.S. So we'll see what happens on Monday. We saw a little pop in gold after the close on Friday, and a little pullback in the stock market. We'll see if we get that follow through next week. As you know, I'm leaning, as Henry is, a little bit more on the bear side here, thinking that a little seasonal pop here into mid-July, and then we're going to head back down again into the fall. And we do have the convention this weekend, too. Stay tuned. We'll be back to you after the break.
You're listening to Wall Street Raw with Mark Leibovit. Go to WallStreetRawRadio.com for information on Mark's newsletters and products. Stay tuned. Mark will be right back.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week Elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at WallStreetRaw.com. Here, Mark provides you with his latest ideas on how to help build and protect your wealth, help you avoid the next big market tsunami, and also stay healthy to enjoy your wealth. Mark has a special free gift for listeners of his Wall Street Raw radio show. Go to WallStreetRaw.com and sign up for his free Vice News Raw report. You will receive it weekly, and it is totally free. No credit card information is required, and no one will call. Sign up today for your free Vice News Raw report at WallStreetRaw.com. That's WallStreetRaw.com for your free weekly report from Mark Leibovit and WallStreetRaw.com.
Have you ever thought you'd like to flip houses but didn't know how or where to get the money? Are you ready to be your own boss so you can start living the good life? Hi, I'm Preston Ely. I used to be so broke. I had my electricity turned off 9 times, but I figured out a way to quit my job and find financial freedom in real estate. For a limited time, I want to send you a free copy of my smash hit selling book, How to Get Rich in Real Estate. It shows you how to copy exactly what I did so you can make money from the comfort of your own home without even doing any manual labor. I've already given away 5,000 books and they're going fast. To get one before they're gone, call 1-800-958-9859. Listen, if you're sick and tired of stressing about money, this book could change your life. It's short, fun to read, easy to understand, and awesome. To find out how to get your free book while supplies last, call 1-800-958-9859. Call 1-800-958-9859. 1-800-958-9859.
This is David Cordani, CEO of Cigna. For more than 20 years, Cigna has worked with the March of Dimes to address premature births in the U.S. Premature births cause horrible suffering and cost billions of dollars each year. That's why Cigna is committed to raising funds and awareness through our employees, family, and friends to improve the health of moms and babies. Please join us in supporting the March for Babies. Start your team today at marchforbabies.org.
This is a healthcare alert from the Pain Relief Hotline. If you, a family member, or a loved one suffers from knee, back, shoulder, or ankle pain and have Medicare as your primary insurance, we've got great news. You don't have to suffer any longer. You can immediately qualify for a pain-relieving brace at little or no cost to you by calling our 24/7 Pain Relief Hotline at 866-389-0620. Delivery is free and all paperwork is handled for you. If you are on Medicare and have knee, back, shoulder, or ankle pain, don't wait. You can qualify to immediately receive a pain-relieving brace at little or no cost by calling our 24/7 Pain Hotline now at 866-389-0620. Our representatives are standing by 24/7 to take your call and rush you your pain-relieving brace at little or no cost to you. Shipping is free and all paperwork is handled for you. Just call 866-389-0620. That's 866-389-0620. Again, 866-389-0620.
This is Dan Pilla. Do you owe the IRS money you can't pay? Are tax debts crippling you? I've defended people from the IRS for over 30 years. I've helped thousands, and I can help you too. I wrote the book on IRS settlement, and I'm telling you, there's no such thing as a hopeless case. Call 800-34-NO-TAX to finally get free of IRS debt. With the IRS's new programs, there's never been a better time to solve your problem. Call 800-34-NO-TAX. That's 800-34-NO-TAX, or my website, danpilla.com.
Responsibility begins and ends with our partners and our shareholders, and that's it.
There is no freedom without the law.
Get it? Got it? Good.
Welcome back to Wall Street Raw and the final segment with Mark Leibovit. Now, here's the elf himself.
Welcome back, my good friend and special guest, Eric HADIK. Eric HADIK is a trader and analyst, and as many of you know, have been listening to the program. He's been intimately involved with the markets for many decades, going way back to 1982. He publishes the Inside Track newsletter, and good friend, technical as well as cyclical, and he's done some great work over the years, and we love having him on the show as often as possible. He has a subtitle to his newsletter, Inside Track, saying, "Let us run with patience the race that is set before us," from Hebrews 12:1. That's what caught my attention originally to Eric's work many, many years ago. Eric, thanks for joining us on this Saturday morning.
Thanks for having me back, Mark. Always a pleasure.
Well, you know, we can't say we haven't had some volatility in the markets here in the last few weeks. And one of the interesting things you brought up in your newsletter, which was great research, talking about the big cycle. I believe it's like an 80-year cycle that seems to repeat often, and it seemed to be coincident with the Brexit exit. So let's talk about that a little bit. That's very significant work.
Well, the 80-year cycle is actually the bigger version of an 8-year cycle that has been so uncanny in the UK and in the British pound, just pummeling the pound on a regular basis. And I broke that down into, you even go back to, say, 1960 when Britain was eclipsed by Germany and France as the powerhouses in Europe, and that started the whole process. And then 1968 they had a debilitating financial crisis when the pound was devalued and investors threatened to abandon it. 8 years later, 1976, the pound gets pummeled again, and the UK is forced to go to the IMF for a bailout. 8 years later, 1984, record unemployment, pound plummeting, industrial outputs plummeting, and another pound crisis. 8 years after that, 1992, George Soros breaks the Bank of England on Black Wednesday. The pound is just in a free fall and forces England out of the exchange rate mechanism in Europe. Exactly 8 years later, a reeling pound creates an inflationary debacle in the UK. Highest gas prices in the developed world, shortages of gas resulting protests and food rationing. 8 years after that, during the global financial crisis, the pound gets plummeted, or is plummeting 35% in 14 months. So every 8 years without fail since 1960, the pound has just gotten hammered. And that's why I was looking for the same thing in 2016 and why that seemed to certainly hint that Brexit would be approved by the referendum on June 23rd. And sure enough, the pound is just getting, or did just get pummeled again as a result of that. But the overriding 80-year cycle that you mentioned is a bit more serious cycle and has timed the recurrence of war in England, Europe, and even North America going back to the 1300s every 80 years. But if you look at the recent couple of centuries, all you have to do is look at the culmination of the Revolutionary War, which really culminated in 1781. Then 80 years later, the start of the Civil War in 1861. 80 years later, the U.S. entry into World War II, 1941. And we're coming up on that 80-year cycle again, which usually is preceded by a 4 or 5 year period of preliminary conflicts and battles. So that 80-year cycle is something that's certainly on my radar. And as I had also shown in my Inside Track newsletter, a similar 80-year cycle has been impacting the British Empire, and going back to them losing the American colonies in 1776 and 77, then 80 years later, the Indian Rebellion of 1857, 80 years later after that, when they were putting all their emphasis on Asia as part of their empire, then you had the Sino-Japanese War, and 80 years later comes into 2016, 2017, when it looked like Britain, the UK, would really see the next phase of this dismantling of the empire. So all of that together is just what told me we were entering a crisis period in the UK and ultimately Europe beginning in 2016.
So we have war cycles coming up. We've been talking about this for a while. So the impact of the war cycles and your investment strategy is an important balance. Where do you see investors, and where do you see investors going in a war environment?
Well, I think that gold and other safe havens will definitely be one of those target investments, but timing is critical, and I thought that 2016 would see an initial advance in gold during the first half of the year, but then we'd see some consolidation in the second half of the year. I'm looking at 2017, 2018 to be the time when I think that gold and silver are really going to make their more sustained move to the upside.
Companies that benefit from war usually do well. They say the markets like war because of the defense stocks and so forth. That would seem like a play as well, correct?
Yeah, but I think that the timing would be so critical there because I think that we're going to have some struggles in the equity markets. I'm looking at the later part of this year and then into 2017. So you kind of have that, if that does come to fruition, you have that competing influences of the overall market heading lower, and yet something more specific like you're mentioning defense stocks trying to rally in the face of that. So timing is really critical in something like that.
Absolutely. Eric, really appreciate you joining us here. Real quick, though, do you have any comment on the election coming up in November in terms of the markets? Does it make any difference who is elected, or we just look at cycles and the cycles tell us there's pressure coming after November?
Yeah, I just think that there is so much. I think we're going to see increasing uncertainty leading into that, which is the one thing the markets really hate more than anything. And I'm really just holding back as far as my thoughts and opinions. I don't know who will be elected, but I think that if ever there's a chance for complete surprises, this election is the one. And that could even be anything as extreme as if Hillary and Trump really start getting ugly. Maybe there's another candidate that rises if there's time to do that officially. So there's just so many options that I'm more looking at the markets themselves. I think that they'll struggle with the result either way.
Eric, thank you so much for being with us. Eric HADIK from the Inside Track newsletter. Eric, how do our listeners reach you?
The best way is through either of our websites. The flagship website is InsideTrack.com, spelled with the extra I in the middle. That's INSIIDETRACK.com. And also through our other website, 40-Year Cycle. It's the number 40yearcycle.com. That's the best way. You can contact through us through there, get any samples, and find out subscription information.
Thank you, Eric. We'll talk to you real soon. Have a great weekend.
All right, thanks. You too, Mark.
Thank you again, Eric. And we've had an exciting show here for you, listening to Henry and Eric, and, of course, my good friend Sinclair. Is always a great pleasure and very insightful for all of us. We only have about a minute here to the end of the show. You know, we're seeing a lot of volatility in the markets here and a lot of action. Bonds pulled back here late in the week, but as you know, they posted new all-time bull market highs, which tells you there's still a flight to safety. Gold and silver pulled back a little bit here, but as Henry indicated, and as my work saying, there's still a buy here for another push higher. There's going to be volatility. You're going to have some big shakes along the way there, and it could be, a couple 3-year play there. And as far as stocks are concerned, well, seasonally, you get a little bit of a summer rally, but then it pulls off again, so you got to be careful. As my old friend Ed Hart used to say on the old Financial News Network, and we close our show each week, we will know in the fullness of time. Thanks for joining us on Wall Street Raw.
Thank you for listening to Wall Street Raw with nationally recognized market timer and previous Wall Street Week Out, Mark Leibovit. If you missed any of today's show or to get in touch with Mark, please go to WallStreetRawRadio.com. Any stocks or investment discussed on Wall Street Raw are not in any way a recommendation or solicitation to buy, sell, or hold. We first recommend you seek out a licensed financial professional for advice. Go to WallStreetRawRadio.com for more information on Mark's newsletters and products.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at WallStreetRaw.com. At WallStreetRaw.com, Mark provides you with his latest ideas on how to help build and protect your wealth, help you avoid the next big market crash, and also stay healthy to enjoy your wealth. Mark has a special free gift for listeners of the Wall Street Raw radio show. Go to WallStreetRaw.com and sign up for his free weekly Vice News Raw report. While there, go ahead and sign up for his free Gold News Raw report. You will receive both weekly, and both are totally free. No credit card information is required. Sign up today for your free Vice News Raw and Gold News Raw reports at WallStreetRaw.com. That's WallStreetRaw.com.
This is an alert. If your business or church is building this year, you're about to pay more than you should. This could mean thousands of dollars more for your office, retail space, church, or warehouse. A General Steel building can save you as much as half the cost and time of similar conventional construction. And we're offering rebates of up to $20,000 to help you build today. Call General Steel for free information that could save you thousands. Call 866-91-STEEL. 866-91-STEEL. 866-91-STEEL.
Paid non-attorney spokesperson Adam Pileski of the Pileski Law Firm with principal office in Houston, Texas is the attorney responsible for the content of this ad. This ad is not legal advice, and the choice of a lawyer should not be based solely upon advertisement. Services may not be available in all states.
Attention Xarelto users. If you or a loved one took Xarelto and suffered a serious bleeding event, you may be entitled to financial compensation. Xarelto is a popular prescription blood thinner used to prevent blood clots and protect patients from strokes. These serious bleeding events have led to numerous cases of hospitalization and even death. Phone lines are open 24/7. Call 800-261-0937. That's 800-261-0937.